So we'll start from the next method. So the next method is called as reducing balance method. So what we'll do is we have already worked out this sum, okay, as a straight line method problem. So in a straight line method problem, we have already worked it out. So we'll copy that full problem, okay, we'll just copy that full problem and we will use it for this one. Because when we use the same numbers, you will easily identify like what is the difference between the two methods and how they are like worked out. So we'll start. So a machine purchased on 1st July 2003 at a cost of 14,000 and 1,000 was spent on its installation. The depreciation is 10% on the reducing balance method. So this alone we have changed. The books are closed on 31st December each year. The machine was sold for 9,500 on 31st March 2016. Show the machinery account for all the years. Okay, so we won't get this answer because this answer is for straight line method. We'll get a different answer for reducing balance method. So we don't need to like create a lot of new entries here. So that is the good thing. So we'll start. So the cost of the asset is like installation plus the machine cost both put together. So we are buying the machine on 1st July 2013 and the value is 15,000. From there we get the we are like finding out the depreciation. So the depreciation would be 15,000 into 10% into 6 by 12. Okay, so for 6 months depreciation we have provided it's 750. So there is no change in this one, okay, because like we are only doing the the first depreciation, so there won't be any difference. So the same balance EF is the same and balance BF is brought down and we have our depreciation here. So we have the 14,250 which is brought forward. The depreciation will change from the second time computation. Okay, so when we compute it second time, we will not have it from on 15,000, we will have it on 14,250. On the reduced balance only we will be like working out, right? So the value would be 1425. And what would be the brought down balance? The brought down balance would be this number minus 1425. Okay, so this number is what is like carried out to the next year, so 12,825. So again we have to provide depreciation, and this time we have to provide depreciation on the 12,825. So if you provide depreciation on this, it comes to 1282. Okay, we'll just ignore the decimal because we don't want that kind of an accuracy. So our closing value would be different. It would be this value minus this value. Okay, so it comes to 11,543. So that is the value here, 11,543. Now we have to provide depreciation for the last sale. Okay, we are selling it just like in 3 months. Okay, in March we are selling it. So again it's going to be not this amount, it's going to be 11,543 and we have to compute that. So it comes to 288. And now what would be our balance? See, the balancing figure is the profit or loss number. So the opening value is, the asset worth is 11,543. It is sold at the opening minus the 288. So that will give you the worth, okay, the asset worth. So I think still it would be only like 10,000, I think 11,250 or something it might be. But that worth of asset is still sold at a loss only. So it is like 11,250 worth of asset is sold for 9,500. So it is a loss. Okay. So this loss has to be accommodated. Okay. So what is the loss? 288 is the depreciation. If you deduct that, you will get the carrying value. This was sold for 9,500. So we will end up with a loss of 1,755. Okay. So if you want, you could also find out based on this concept here. So the machine was worth how much? 15,000, and the total depreciation on it, okay, all these numbers 750, 1425, 1282 and 288. So that comes to 3745. So 3745 is a depreciation. So the asset worth is 11,255. Okay, the asset worth is 11,255. This asset was sold for 9,500. So you can find out what was the profit or loss. So this would lead to loss only because this is the value, and they have sold 11,000 worth of asset for 9,500. So that is a loss. So it's a loss on sale. Okay, so 1755 is a loss. So now if you look at both these numbers side by side, okay, you will be like getting a better idea. So if you look at here, so you could see here, this is straight line method and this is written down value method, WDV. So both methods you could see, and we will just like make the heading bigger. Right, so you could see like side by side SLM how it looks and how WDV will look. Okay, so in SLM the depreciation amount is like always constant. Okay, and it only changes when the month is like, it's like monthly proportional alone it changes, but WDV amount will always keep changing. It can never be constant. Okay, it won't be constant at all. So that's the side by side angle of both the problems. Hope you get a better idea with this comparison. So we'll move on to the next sum.